So the Federal Reserve came in yesterday and they did exactly what we thought they were going to do. They did nothing, but they did give us some insight on how they thought the economy was going. So today we have some breaking news on the economic data. We have the initial jobless report just came out. We have the growth of the economy came out, and our trade deficit, it's the lowest since 2009. So my goal today is to help explain to homeowners out there, home buyers out there, heck, you could be a realtor, loan officer, what the heck's going on with those today and why? So folks, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. Let's get over to today's news so you can understand what's going on with these and the whys behind it. So yesterday we had the Federal Reserve. They came out and said, okay, we're not going to do anything because the economy is chugging along okay, and the jobs report isn't looking so bad either. Well, today we had some huge news, and it's filling in a lot of gaps that the Federal Reserve monitors. Here's what they monitor. So let's get over to the news that came in today. This is pretty good news, folks. And the problem is, good news here is bad news when it comes to mortgage rates. So let's get to it. The Federal Reserve cut rates. Why? The last time they cut, they said the jobs market was deteriorating. Well, let's go over these numbers, the production in the U.S., and also our trade deficit. And you might be a little surprised on how maybe healthy our economy is. Just saying. So you go over to here, and here's what I want to look at first. Initial jobless claims. Last reading was 210. It actually was revised up to 210. And it came in at 209 this time. So kind of right on point. So the jobs numbers aren't crashing. But the concern is, if you lost your job, can you be absorbed back into the system? That's looking like it is as well. Because the last reading was 1.86 million people were out of work. This time it was 1.82. So that's looking pretty good too. So on the jobs numbers, it doesn't look so bad. You got unit labor cost. This helps companies create more profit, I guess, is the best way you can put it. It was a positive 1 previously. Now it's minus 1.9. So that means companies' costs are going down. You have productivity that's just killing it. Last reading was 3.3, now at 4.9. So if you look at all this, and then a trade deficit that's 56 billion less than where we were. This is the lowest number since 2009. So if you're sitting there saying, okay, the Fed should cut, they're going to sit there and say, why? So let's get over to the rest of the market. Then I'm going to give you my thoughts. What should you do? Okay, so let's get over to here. Here's what the bond market's doing. So each morning I come in and I show you this thing. This is the most important number if you're watching mortgage rates because it's a mortgage bond. Right up there, it says MBS. So all you have to understand is this right through here. If this number goes, unfortunately, if it's going down today, that means mortgage rates are going to go up. Remember the last, I want to say 2 or 3 times the Federal Reserve met, and they come out, and then all of a sudden the next day, even if they cut rates, the next day mortgage rates just spiked. Well, this time they're not spiking. They might tick up just a tad, but I'm saying they're going to be flat as a pancake because of today's news. Now let's get over to the stock market, see how it's faring for the day. So if you go, I'll take that as a plus. I don't think cryptocurrency is doing well at all, but oil is really freaking me out right now. Oil is at 65, teeter on $66 a barrel. This was 59 not too long ago. That's a pretty good big increase. This isn't good for inflation, but it's still below the levels where were we? $85. Okay, and then the U.S. Treasury, the 10-year Treasury right behind me is up 0.0006. Nothing really there. So let's get over. Here's what I was saying the Federal Reserve looks at. So if you're looking at these numbers, you're like, okay, nothing's really crashing, and we also don't see inflation spiking like a lot of people thought. So the Fed's just going to sit back. So mortgage rates, the markets really aren't going to do much. The equity markets might. But let's get over to what the Federal Reserve is expected to do at the next meeting. They're not going to cut, folks. There's an 85% chance they're not going to cut it at this meeting, the one coming up, and the one in, what is this, January, February, March, April? So there's no expectations of them cut maybe until June. So what do you do if you're a homeowner? What do you do if you're looking to buy? Well, I got a tool for homeowners out there. It's right down below, and I'll give you a trick. Most of these calculators I have down there, if you use the promo code DAN, capital D, capital A, capital N, you get these for free. So if you're a homeowner, use this tool. What it tells you is right through here. Should I refinance or should I wait? So here's a client that we're working on right now. They have a $440,000 loan. The rate's 7.3. Yeah, 7.3. They were on a 30-year term, which is $360. Their total cost about $3,500. They can get a rate today of 6.2. It's a 30-year term. But if they wait, they're saying, okay, Dan, you keep telling me rates are going to go lower. Well, okay, wait 12 months. Maybe you get 5.75. Does it make sense to do this? Well, click here and it'll tell you if it makes sense or not. In most cases, it doesn't. So check out this and a bunch of other calculators we have down below. And if you want to donate, it says preferred price. put in $1. Okay, so you can get access to all my calculators down below. But what if you're looking to buy down the road or you're looking to build? Well, it's pretty simple. I don't think anything's really going to majorly change between now and then. The only thing is there's going to be new members of the Federal Reserve. So they'll be more, I guess, sensitive to cutting rates. But that's not what affects these things, because these things are affected by the markets and the Federal Reserve only controls the federal funds rate. If you're a little confused, do me a favor. Subscribe down over there so every morning I come out and give you a video. Watch 5 minutes of it. You're going to learn a lot when it comes to real estate. Because my goal is this. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I've been doing this for over 35 years. I want you to understand what in the heck's going on with those and why. And if you're a homeowner, home buyer, love to work with you. I've been doing this for over 35 years. Join me at the Rate Update. We have tons of tools here for you. You realize we also have over 6,000 videos in our YouTube channel that I did. So check it out. I'm sure there's something there that you can learn from. So folks, that's it for this morning. I will be back later in the closing bell to let you know how this mess ends for the day. But so far, so good. Rates aren't moving, but the markets are up just slightly. So that's it. Please, if you haven't subscribed yet, do so. Otherwise, try to stay warm out there, folks. And I'll be back around 3 o'clock today with your closing bell. And hopefully I don't have anything really exciting to tell you. Thanks a lot. See you then. Bye-bye.